What's up, world? How you doing tonight? Oh man, or this morning, whatever. It's your boy Chuck Tizz, Chuck Taylor, Chuck Boomberg in the house. As most of you on the screen probably know what this is, unless you are not part of the Bag Brigade yet. You're welcome to it. There'll be a link in the description. Basically, I've got a lot of requests from new members. For the most part, I'm happy to do it. Kind of like an options tutorial. I think the other ones I did are kind of outdated, so why the fuck not, right? Excuse my language. Why not, right? Because I don't ask why. I ask why not. Because why not, right? In the survey, though, there's a lot of different things. Not going through it. There's other videos for that, but there is an education tab with all like option stuff that you can go through. Trading mentalities and all that good stuff for free. Free 99, maybe it's all it is. Yeah. So basically, I'll start out like this. So I use Webull. That's my main options trading account. Typically keep over 25K in there, so I have the ability to day trade freely without getting flagged, I'll still get flagged, but without getting restricted. Because you have to have $25,000 in your portfolio value or more to be on a margin account, I believe, and still day trade freely. Otherwise, it's a 3-day trading. You can make 3-day trades in a 5 trading day period. If you exceed that, then you are put into what is called, you're flagged and you're restricted, and it's what they call basically sell only. You cannot enter new positions. You can only sell what you currently have, and that's a 90-day restriction. So you don't want to do that. So it's always good to have multiple brokerages, especially if you're under 25K. Small accounts, have Webull, have Robinhood, there's public.com, there's a bunch of different ones you can use. But I'm just kind of telling you what I do. I used to use Robinhood, but I don't use them anymore. But I am going to talk about them tonight. But anyways, let's just get to the basics. Options. Here's the option chain right here for QQQ. Options are contracts that give you the right, but not the obligation, to buy or sell a stock at a specific price within a certain time frame. Okay, each option contract usually controls about 100 shares. 100 shares for sure of a stock at a set price. Options are riskier than regular stocks, but with smart risk management, they can generate much higher profits. Remember, option contracts move with the underlying stock you're trading. Now, let's talk about 2 main types of options here, right? Well, first we have calls, okay? And calls are going to be right here. These are the calls. So I'm going to scroll down to right where the stock price is trading at. Here are your call options, and these are your put options. These are your out-of-the-money call options, and these are your in-the-money call options. These are your out-of-the-option put options, and these are your in-the-money put options. What do I mean by that exactly? So think about it just logically. If you basically the smartest and easiest way I can describe this is so here's how this works. So I'm gonna use SPY, which is the SP 500, right? So you could buy SPY share, sure. Right? It's kind of boring, moves whatever it does, but cool thing about options is you're buying a contract for a premium price that, like I said, states that you have the right but not the obligation to own those shares at the selected strike price, okay, upon expiration or before, if you are right. And what that means is basically you're making a bet on a bet. You are betting, for instance, that the S&P here we're gonna give us a couple of days, right? So Friday, so it's the 23rd. So these are expiring today. So they're gonna be priced very cheaply. So notice this: 584 call strike for it's priced at 196, right? That's because it expires today. Now Monday or Tuesday, because I think Memorial Day is the next opening day. Look at that same strike price is priced at. It's like over double. Okay, because that is all due to the time effect. With options, the more time you buy, the more expensive the contracts can be. Now there's also another thing to look at it. The further away you go out of the money, meaning away from where it is currently trading, the cheaper it's going to get. Same with the puts, right? The cheaper it is going to get. So there's two ways to look at it. You have a belief that maybe the SP 500 in the next month or two, let's just say in July, you think that the SPY, which is currently trading at 583, I'll even go on a further out time frame just to make even more sense. So that's too far, but a daily is fine. Okay, so it'd be logical, and honestly, this is not the worst idea. To say in the next 2 months that SPY could come back down to at least fill this gap, which put it at 568. But let's just come to this level about 561, 562. So just 560, right? So let's look at the 560 puts for 2 months out. Whew, these are out of the money too. Those are 860 something bucks. Are you kidding me? All right, let's go a month out. Still gonna be expensive, but that was way more than I was expecting. $485. I know it says $4.85, but you have to multiply everything by 100 when it comes to options because each contract represents 100 shares. Okay, so what? All right, fine. In a month, I believe it'll be there, right? Cool. So what am I gonna do? This is Webull. So there's ways to do this. You right click it and you go buy, and then it's gonna pull this up, right? Market's closed right now, so you basically can only put in a limit order. But if the market was open, with SPY, the spreads between the bid and the ask are usually like a penny apart, so it's not that big of a deal. I would always just go to market, buy, and then here's your quantity of contracts. Let's just say 5 of these, and that's a lot, right? So then I'd have to unlock my trading. And then I place my order. The beauty about all this, though, about Webull, is they have paper trading. You can literally, and I do this for fun and stuff too. Like I follow most of my trades. I started with $1 million. I should have started with a more reasonable number, like 10,000 or something. But if I reset it, it's gonna mess all this up. But either way, with paper trading, like same charts and stuff. Like I have I always drag my options that I'm holding to the top of my watch list, so I can just keep monitoring them. But so these QQQ puts them in. Let's see. This check. Short term, yeah. So on a 5 minute. QQQ in the overnight session is trying to come up here a little bit. What time is it? It's in about 10 minutes. The actual pre-market will open, but anyways, I did really well on that. I'm only holding one contract. I had 10 of these, and basically, I sold all. I scaled out, meaning I just piece sold because I bought them like 5 days prior. So these weren't even a day trade, so I was able to just like kind of piece off, until I had about one left. I left a runner. I don't remember if that was yesterday or today or tomorrow. It doesn't matter. So that was how I did it. And we will. I'm gonna use the paper trading thing as like an example. But this is how it would work in general, right? But since the market's closed right now, it's really hard for me to get an order executed, I guess, when it comes to options. But right now, currently, I'm in Robinhood 66 calls that expire today. I'm in these QQQ 510 when I have one left. And then with the Robinhood ones, I think I have one left too. Because if you look at Robinhood's stock chart today, I bought these basically, these calls. Where did I buy them at, man? I don't even remember. I think I bought them like right here. I just saw the momentum, and basically it was when it was at like right around like just under 65, and then I bought, and then it went up, and they went in value, and I started scaling out of the position, and I'm holding one. Good thing I did because it dropped at the end of the day. Other than that, I'm in some GameStop calls for October, so these are like 5 months away for the 35 call. But GameStop's been on a tear lately. Like, I'm not even joking. Like, I mean, it's at a very crucial level here. Why did I buy them? I don't really know. There's a person in one of our analysts in the server, Galaxy Star. Shout out Galaxy Star, by the way, because I'll tell you this. Last May, when GameStop was trading like down here, like $9, like, I mean, I don't even know. That was like the lowest I think it ever been. Hold on. Well, not ever been, but like, okay, here's 2021 squeeze, right? The big squeeze that everybody knows about. And then here was the May 2024 squeeze, right? So it came all the way down to like $9, and Galaxy Star just kept saying, you know, GameStop. You know, finally it went up to like 17 or something. I was like, man, that thing's been on a rise. I'm gonna get in it, right? So I think I bought like the $25 strike calls for like for a month out, and I bought like the 35s for like 2 months out. They weren't cheap, but like I think I spent a total of like $3 or $4 grand on this, and basically, I don't know why that's so loud in my headphones. But yeah, I mean, basically, I don't know what my total cost basis was, but regardless, that Monday, I bought them on a Friday, okay, in May of 2024, which should have been like, I guess, this day right here, and then that, yep, exactly, and then it squeezed up all the way to 64, almost $65. So think about how much those contracts went up, right? Remember, I bought the 25 and like the 30 strikes. 25 strikes I bought like a month out of expiration time, and the 30s I gave myself two months. Doesn't matter. I think collectively I probably spent $3 or $4 grand. By the time this thing reached its peak, those contracts all together were worth almost $100,000, if not more. I don't know. I scaled out of them. What I'm saying is that's how options work. I mean, if a stock goes up drastically 10%, well, your option contract's going to go up 1,000%, because remember, there's 100 shares attached to it. You have to think about it like that. But there's a lot of other factors that go into it, time decay, and I mean, I'm going to have to probably make this into segments. But anyways, on Webull, this is how you would do it. You'd find your strike. All right, you pick your date. Like I said, I have the Octobers, and I have the 35s. So right now, they're at 445. When I bought them at like 3 something. But you would just, you know, right click, and you hit buy. And remember, it's a simulated trade, and then if the market's open, you can do market order, you can set a limit order. Limit order just means you want it, you will only buy it at this specific price per contract and the amount of contracts you want. Just for shits and gigs, I'll do it. It's not gonna fill right now, but let's say I want to do a limit order at $5, right? Get a little discount on that premium. So now that order is placed. Now, come morning time, whatever happens, I mean, if those contracts do go to that price, it will fill them. Remember, this is a paper trading account right here that we're doing. I'm using it. So that's how that works, right? You're basically making a bet by October 17th that the price of GameStop will be at $35 at the very least, right? At the very least, $35. Or higher. And here's how this works. So if you are correct, I mean, most retail traders don't do this, but if you are correct about this, you have the right, again, but not the obligation, to execute that contract. Meaning, let's say GameStop went to 45. What if it went to 50? Okay, now you have the right to buy 100 shares for how many contracts you hold, you know, at $35 a share when it's trading $15 higher. Now, typically that's, I mean, can you afford to do that? I don't know. let's see, 35. Let's say you're holding 10 contracts, right? $35 share times 100. Okay, so that's 3,500. So 3,500 times 10. Yeah, I mean, you need 35 grand just to execute that. Why would you do that, right? Your premiums have already gone up so much if you had bought it at the correct moment, right? Like if you bought the contracts for $350 a contract or $250 a contract, and now they're worth like, $500 a contract. Yeah, you could start either selling some of them or all of them. I mean, whatever. But as GameStop moves towards your price, especially in a drastic move like this, you will see the value of your option go up. And there's a lot of other factors that go into it. This is going to be a very complex and detailed way of explaining how to do it, but that's the basics of it. You're making a bet, and as time gets closer to your expiration date, if it trades flat or it goes down, like you are going to watch. It's called time decay, theta. Like it eats away at your contract value that you bought it for, the closer it gets to expiration, and like it hasn't moved, right? And the best way to really calculate that is a thing called optionprofitcalculator.com, and this will give you a good idea, right? So I'm saying GameStop, get the price. We bought the options for October right here, and it was the 35 strike, right? Yeah. Okay, now I bought them for $359, I believe, and I have 5 of them. All right, so I'm gonna type that in, and then I'm gonna go ahead and calculate this. So here's how this works. Let's adjust the price range there a little bit. Let's get it back down to like 25 to 40, just for that's good, or 20 to 40. Fuck it, why not? It's not unrealistic. Okay, cool. So here we go. Profit and loss. May 26th. I guess this is gonna be kind of because it's so far out. So it's saying by May 26th, which I believe is 3 days from now. It's like Monday. It's gonna be worth. If it opens up if GameStop opens up at 29.25, right? Those contracts together are all going to be worth like $180 in profit. But you can see where time decay comes in, right? Because if it trades flat, look, these things start losing money, right? But as it goes up, right, especially if it goes up drastically faster, like the faster it goes to your target, like the more profitable it's going to be. Otherwise, like, it could go to 35. Cool. Great. In 2 days, 3 days, I mean, you're gonna make $2,000, but if it takes like a month to do it, I mean, you're gonna lose that value by the time decay. So that's always important to remember. There's other factors, but that's the best way to kind of like gauge it. Hopefully that makes sense. Again, there's a lot more that goes into it. I mean, if y'all trade on Robinhood, I mean, I don't, but you just get to trade. This is on the web top. I had Tesla. Pick your options. Here's your expiration dates. All right, so I mean, let's just do the weekly. Basically, they expire today. Now, I know that Robinhood's like kind of upgraded their platform to like have actual charting, because right now it's just this shit. I mean, can't really call this a chart if you ask me. I mean, whatever. But let's just look at a month of time, right? Well, it's kind of consolidated here. I mean, I'd rather, use a real chart, look at it, and be like, okay, what's going on with Tesla, right? Turn extended hours off, get a better idea. This is the hourly chart. I can turn on some signals here. Pivot points. Yeah, so, if I was looking at this chart right now, on the hourly, I'd probably bet into the downside. I mean, this is don't put in, this has nothing to do with any kind of fundamentals or news to the company at all. This is all strictly from just looking at a chart. That is it. I can go to a shorter time frame too if I want to. So this green line is VWAP. These are your pivot points. Really, really good indicators. Some of these indicators. Oh, you know why it's doing this? I'm on the wrong setup. There we go. So if I go to like a 15-minute, okay. Alright, this gives me a clear idea. Extended hours off. Okay, so I mean, these pivot points are pretty on point. I'm not gonna lie. Look, I mean, I don't even. These are self-automated. I mean, they really do like hold these levels pretty well. If you ask me, like bounce there, bounce here, like held there, bounce there, right? Like So if I were to be a betting man, which I am, if I wanted to go to the downside, I mean, I'd be looking at like the 338 or 330, whatever. 330 750s, maybe even the 335s for they're about $1.94. So yeah, I mean, I would do something like that. You can get a little bit more aggressive. Remember, they expire today, so if it goes sideways or it goes up, again, the time decay is just going to eat away at your contract. So you need this if you're going to buy a 0 day, you need this thing to move in your direction, like pretty quickly. So I advise not to do that, right? But that's why they give you other options. And Tesla's very volatile anyway. I mean, let's get more realistic here. Let's look at just something like I said, SPY, right? Which they have expirations every day. But, you can buy at least give yourself 5 days or something. Okay, where's SPY right now? I don't know. Let's see. It's at a crucial level. There's a huge gap to fill below right here. I mean, a lot of people might not know what any of this stuff means, but look, I have this thing fibbed out, right? So from peak to trough, so it's testing this 78.6 level. If it breaks it, okay, you have a gap to fill, and I'm more willing to bet that it does fill that gap here sooner than later, personally, because most gaps do get filled. So shit, why would I not want to look at something like SPY 565 puts for? What I say? I don't know. Let's go. Let's go to the end of the month, or May 30th. What did I say? The 565 puts. Yeah. 116 bucks, right? Let's just pretend the market's up right now. So I'm gonna hit buy. I'm gonna tell it I want to buy 5, right? Cool. Market order, limit order, whatever. Market order should just fill you right away, and blah, blah, and you would just boom hit it, and then you're in, right? Same thing with the simulated trading stuff. And then you can also monitor the status of your paper, your paper. It looks the same on real, but this is the paper, right? So I only have one of these contracts left each. I'm down on both of them, but I remember I scaled out of these. My GameStop ones that I also have in real life, but I just simulated it as well. These are up. What did I buy them at? 368 a contract. They ended the day at 483, and remember these expire in 5 months, so I was up $575 just on these alone. So anyways, it's kind of how it works on Webull. I advise you to use Webull for paper trading. It's the best, I think, option paper trading thing you can with Robinhood. I mean, simple. I mean, you go. Remember, we're gonna go to SPY. We're not gonna do this. I'm gonna go SPY. No, SPY, bro. SPY. And then we're gonna. Remember, we said the 565s. But we're gonna do it for the 30th. You gotta make sure you get all this right? It makes a difference. And we're gonna do the puts. And I said 565, right? And if you click it, actually, it gives you some information. Here's your bid, right? Bid is 116 or $1.16. The ask is 119. So the middle is going to be 118. These are the amount of people willing to buy, and this is what they're willing to sell it at. So they use a middle price. Here's your high, your low, and then you have your Greeks, your delta, your gamma, theta, vega, and rho. Theta is your time decay. Okay, I'll get into all that later. But anyway, you can click on the option that you're looking at, and then if you wanted to buy it, you can obviously just hit yes. Now, I'm not gonna lie, my account says I'm in deficit, and there's a reason for that, because me and them have a very long-lasting battle about this shit. But I'm not gonna get into it right now. But they think that I owe them money. Is what they do. So I would buy 5. There's your limit price, right? But you could also change it to Well, when the market's open, you can change it to market order. Market is not open right now, so change it for good for 30 days, good to cancel, get whatever. Then you would just submit it, and then hopefully you would get filled at that price right there, right? And then if Tesla were to, I mean, it does give you like some sort of thing like that. So if Tesla goes to, or I'm sorry, SPY, not Tesla, it's telling you like how much these contracts, what your shit's gonna be worth, basically, as it goes to a certain price. Like SPY at we said 565. So if it keeps dropping, okay, let's say it goes to 565, our strike price at expiration. This is what this is calculating at. And the reason why it says break even, it says 563.82 is where it needs to be, is because that's it's subtracting the premium of the dollar or the $118 or whatever that you're paying to have this contract in hand. So to break even at the day of expiration, you would have to be the price would have to be at 563.82, basically. Hopefully that makes sense. That's your Robinhood lesson for you. There's another great one, public.com. I'd much rather use them personally. I'll run through it. It's the same thing though. They're not the best trading platform, but same deal. You just hit SPY, and to bring it up, trade SPY options. We're gonna do the 30th, and we're gonna go puts, and we're gonna do the 565. Why are these? Yeah, you can still click it. It'll open it up. It'll tell you the same kind of thing. This gives you a little bit more details. But anyways, and then you would just hit the plus button, and then you would say how many contracts you want, and then you would either do a market order if the market was open, or you do a limit order, right? And you just, and then boom, submit it, done, then you own them, and then yeah, you just want it to go down. It does the same thing right here. It's saying basically as if SPY, I can type it in here, right? So we'll do this real quick just to give you a perspective, because I know I'm rambling at this point. I'm not. So we're gonna go SPY, get price. Come on now, price please. That'll do it. Is that accurate? 583.09. Is that fucking accurate? Yeah, it's extremely accurate. All right. We're gonna select our options for the 30th. And we're doing puts. Remember, and I said 565. Right here. So let's say we bought them for that price, and we got 5 of them. All right. Same thing. Just calculate it out. And here you go. So today, depending on where SPY opens up, if it opens at 583, like the higher it opens up, like right, you're already gonna lose value if you already own them, right? That's not calculating the fact like you have. This is calculating the fact that you have bought them already, right? But we just got to gap up a little bit here. The market pre-market just opened. We just gapped up a good 0.25% or some shit. Okay, but anyways, we're still gonna focus on what I was talking about. Okay, so boom, our target was 565, right? Let's just say it went to 565 today. Those 5 contracts that you ended up paying, your cost basis was $585, and it goes to 565 today. Well, now you're up 423%, and that's a $2,475 profit. So, but you can see as the days go on, that gets less and less and less and less and less, right? That time decay, that's that theta. So hopefully that visually explains it to you. Other than that, I mean, I can get into like TD Ameritrade or Schwab or whatever, but like most of y'all don't really like using that. But I would go with Webull, man. Webull's and like I use TradingView. Don't get me wrong. I'm not a hater of TradingView. TradingView is expensive, especially for like their big packages, and I don't need all those tools. And like, and with their free package, you get like 2 indicators, or you can only do so much. And with Webull, whether you're trading on their platform or not, their charting platform is actually pretty legit. I have to say that, and that is why I choose to not only trade my main options account on them, because yeah, the charting is just, it's very simple, and it's, I mean, very comparable to trading view. Yeah, there's some things that don't have, but I don't need to have all sorts of crazy, you know, technical indicators. I just need a few things. I mean, honestly, on a short-term time frame, I just need VWAP, volume weighted average price. I need, sometimes I use super trend, which is like a kind of produces these like seller buy signals sometimes. Pivot points for sure. I use the 9 EMA on short term basically, and that's it. And then if I'm going out and further in time frame to, like, you know, just make some, when in doubt, zoom out. I guess that's what they say, right? So I have it set up a little differently. So I got a weekly chart on SPY, right? I mean, I have a couple different indicators. One of them, the moving averages for sure, the simple moving averages. You can use super trend on this if you like to. You might want to adjust a little bit. TD sequential, I'll get into that. You don't really need pivots here, and that's about it. Remember, this is the weekly. Let's go to our daily. So this is the RSI, relative strength index. This is the MACD, moving average convergence divergence. Okay, so to me this chart looks bearish because you're about to see a crossover here on the MACD. You know, whenever this typically happens like that, like look what happens here. Okay, I'm trying to find another good example. I mean, kind of right here, I guess, but I'm trying to find the most cleanest example of that, and I'm probably gonna have to scroll. Yes, that's not the best example, actually. I mean, it really just, where are we at right now? We're in 2023. Hold on. Let's go to 2022. Okay, here we go. Like, after an extended like run like that, this is, here you go, and here's the 2022 bear market, right? Here's a perfect example right here that we're kind of seeing right now, right? And then look what it led to. I'm not saying that it's always accurate. You'll notice there's like these like nines and all these numbers that I'll explain in a second, but like RSI important, especially on long-term time frames. MACD is pretty important. That's your volume. And just, yeah, anything like daily, weekly, you want to be able to understand where really things are, because like if you're just looking at a short time frame and don't realize that, first of all, well, yeah, there's a gap here, but guess what? You also have the 100-day moving average, the 200-day moving average, and it is in orange, the 100 is in purple, and then the 20. They're like literally like coiled up right here. So you want to talk about some support. I mean, I wouldn't be getting, if I'm going to go bearish, I would be stopped. I wouldn't really want to go much. I wouldn't bet that it's going to go much farther below unless some crazy thing. I have about 574-ish, right? All right, so that kind of, after everything we just talked about, now I kind of want to go back and look at those May 30th. Because that, remember, when you got to zoom out when in doubt, right? So now those 565s, so what's the 574? See, they're trading at 266. So you're gonna have to pay a little bit more premium to get them, but I mean, it's more likely to happen. So on the 1 hour, I mean, well, you don't need that. We gotta go back to this thing real quick, but just saying. Hopefully that makes sense. I mean, we want to, you have to turn extended hours off to see the gap, okay? Because the gap happened in overnight. And actually, so it's pretty funny where SPY on the hourly close right here at the S1 pivot, the support level 1 pivot, with the extended hours off, which also, yeah, I mean, look, I'd be betting on going to 565, but you have to keep in mind, what did I say? 574-ish is where all those moving averages are. So you want to talk about heavy resistance. I mean, I'll mark this big line, and I'll even, can I put text over it? Yeah. All major moving averages are here. Where's the text? Wait, what? I've never really done this before, I guess. Adding text to Johnny, this works only on desktop. Yeah, I'm on the desktop. Yeah, damn it. But where's the text at? Dude, This is why I don't ever do it like this. Center. Oh, there it is. Yeah. So like, there you go. So boom, log it in place, and there you go. Other than that, I mean, like, it's not that. It is complicated, but it's really not. I mean, every option has an expiration date. For example, if you pick a contract expires in 1 week, you have just 1 week to close your position before the contract becomes worthless. The more time until expiration, the more expensive the contract is. The less time until expiration, the cheaper it is, but it also is more volatile, meaning swings in the underlying can move that contract's price significantly more the closer it is to expiration. Next, we can cover strike prices. We already did the strike prices. I'm not going to do all that. There's out of the money. There's in the money. We talked about that. Choosing a strike price that's going to be like at the money, basically like right where it's trading, whether it's put or call. Like, you know, your orders are going to get filled, you know, quickly at fair prices. But with SPY and QQ, you don't have to worry about that. But there's order types. Again, like I said, there's market and limit orders, and I mean, like with SPY and any of the big ETFs, you can market order it. I'm telling you, it's just like some of these other like illiquid contract option chains that you have to worry about doing market orders. You want to do limits because you can get a bad fill. Basically, with options, you are betting on a stock's direction. You choose your strike price, you choose your expiration, and what you pay for the contract. That's the premium. It's all about smart management and strategic plays. I mean, at the end of the day, I'll add on to this. Hopefully that makes sense, though, on what an option is and how to trade them. And we'll go into way more depth. But either way, it's your boy Chuck Tizz. I'm signing out. See you at Market Open. Hopefully this was helpful.